So, a new day for Bitcoin. It's been about 4 or 5 days since we last looked, and there hasn't been much price movement, but nonetheless, it makes sense to have a quick checkup, see what's going on. We're looking at the possibility of the weekly creating a simple pullback, in other words, touching somewhere at the bottom of this diagonal parallel channel and then moving up. Now, we did come sort of close to the bottom over here if you were to draw it parallel. So there is a small possibility still that this is the bottom. I think it's somewhat unlikely. I think it's still about 60-65% probability that we will see lower lows for a few reasons. One, of course, is that this move is just absolutely ridiculous, and that it's not a matter of if we correct a lot; it's a matter of when. For any parabolic move like this going up 400, 350%, you're looking for the correction. And of course, you can't just sell at any point. And of course, I did sell, but I had a strict risk reward ratio set up, so I would be buying back, and actually sold around 12,500, quite a lot. So that's pretty good. But now we have, and the reason, of course, why I sold is this bar, this nasty ass hanging man, which is, sorry, shooting star. Hanging man is the opposite of this, the shooting star, where the star shoots upwards, and then, but of course, the price comes right back down, and there's a lot of volume here. And this was really the indication, a strong indication that we were going to see some further consolidation before moving up. And yeah, it's still possible this is the low. I think it's somewhat less likely. I think we will maybe touch up top towards this channel, maybe come towards 11,000, maybe even have a quick fake out, as Bitcoin likes to do, up to 12,000, make people think it's going up, and then come down. So I think that's a possibility. Also, of course, we could just not even reach 11,000, maybe come to 10.6, and then come to the lower levels here. Now, the thing which has changed is where those lower levels will be, where we will actually hit. So you can see from the volume profile here that we have, not so much volume here. The real volume in the interest of the price levels comes down over here, of course. But even over here, you can see that there's going to be some interest in the price. There's likely to be some interest in the price coming down towards these levels, around the 7,500 to 8,100 level. The 21 moving average, I think, is a very important one. It's an EMA, exponential moving average, of course, very similar to the moving average. In any uptrend, it's completely standard for the price to come back down and test this at some point or other. Could it be later? Sure, but there's a good chance that if we're going to see further up movement, that we have this consolidation back to this 21 EMA. And again, that's another reason why I think the probabilities are balanced towards coming down to this EMA before having another, certainly before having another explosive move up. Okay, so now we go down to the more detailed view. On the daily, you can see that we had this, I think it was about here, up to this green bar that we were analyzing it the last time. And we suggested that this was a good confluence zone right here, because we had the diagonal here, diagonal there. Of course, now the price is there, meaning that this confluence zone is not possible to achieve anymore. So now we're looking for the next sort of major confluence zone. And this, honestly, it just doesn't apply anymore. This zone is not so much a zone as it is quite a specific level, which corresponds to the previous low over here at 9,100, let's see, 9,060. You can see the low in this number over here. In any case, 9,060, previous low as well as a previous resistance. So we had a resistance coming up over here, broke through the resistance, came down, acted as support. So if there's anywhere where we're going to find support within this sort of close range, it's going to be over there. But because of the lack of confluence that we could have achieved had the price had come down, a couple of days ago, I don't think that it's going to be strong enough support necessarily. Certainly not for a big buy position. That being said, now we look at the next strongest confluence zone. And well, before we do that, let's have a quick analysis of the EMAs here. So although the weekly is still looking very bullish, haven't even touched the 21 EMA, the daily has now shown that it's struggling. Not only has it crossed the 21 to the downside, but it also came back up to test it, and bam, it came back down. So this is a clear sign that there's the loss in momentum. You didn't see that anywhere on the move up. We touched the 21 support. We touched it here. We were flirting with the 21, but we didn't have any sort of clear rejection. It was all just playing within this box range, as they call it, before moving up. And then here we had these two wicks poking down again, sort of flirting with the line. Here we had a clear breakdown, and not only a breakdown, but a retest and bam. So I think it's rather unlikely that now the daily will say, well, you know what, that was fine. We're just going to break through the 21 and move. Of course, it's possible, but somewhat less likely. So what does that mean for me? That means that the weakness, the more clear weakness that we've seen on the daily that's been demonstrated over the last 5 days, suggests that we have a higher probability now of really reaching not only this level, but actually, although this was a high confidence level before, I think that now, because of these bearish signs, we're more likely to reach lower lows. And the next real notable zone is this one, the confluence being that it's the golden zone of the fib retracement of the whole move up. The whole move up, I'm counting it from where the volume started, around 4,000 level. Of course, you could count it from the very bottom. That's a bit more of a traditional analysis of Fibonacci extensions. And interestingly enough, this would come to a sort of a very similar spot where I'm also, it's a little bit low here, 7,000, but absolutely it could come there. I mean, Bitcoin does this all the time where, everyone's looking right now. Right now, I can tell you everyone is looking at the 7,500 level. So what happens fairly often is that, these whales, they say, okay, well, people are going to have their stop loss around 7,250, 7,350, maybe even 7,150. And if it goes below that, they'll stop out. So what they do is they just sell the crap out of it. And then when it comes to, I don't know, like 6,950 or 7,000 in those ranges, then they just spike it up. So could the price come down to 6.9? Like, absolutely. That also represents another low over here. So there's absolutely some confluence in this big blue box. I'm going to stick to a slightly more narrow range for now, being this box over here. So what are we seeing here? Let's see, the price is here. That means that anywhere in this box, if it falls, that would be pretty good buy opportunity. Why? We have the previous weekly low. This is not just a daily low. This is a weekly low. So if you look at the weekly chart, you'll see even more clearly the relevance of this 7.5K level. Previous weekly low, okay. The weekly 21 EMA is touching where? Oh, that's not the weekly. The weekly 21 EMA is where? Surprise, surprise, around this level, 8,100. And of course, the level is never, it's not science. It's part science, part art. So it can always be somewhere within this range. When we talk about coming down to touch the 21 EMA, it doesn't have to exactly touch it. It doesn't have to, it doesn't have to bounce off it. It could bounce off of there. It could bounce off of there. So this is sort of a general range, but it's worthy to note that it's somewhere within this, that the 21 EMA on the weekly corresponds to also close to the previous weekly support and the golden fib zone of this big move up. And of course, if we really do get this diagonal line, this will be, 3 good reasons to buy Bitcoin if and when we do reach this level. Right, so now let's look at the things from the opposite perspective, assuming that the slightly less likely scenario plays itself out. This line is not relevant anymore. We're going to take that out. Okay, so we have the daily going down here. Let's look first of all at the weekly to see what this potential resistance could be. So the weekly is a little bit complicated here because we have these super long wicks going up, and this is just, you know, erratic, crazy price movement. But I think really the more important zone to look at, despite the fact that we've you know, gone all the way up there, is this level over here. Like if we certainly if we get a weekly close above 11.5, that would be notable. Not just because it would go above the previous weekly close, but also because it would break this diagonal parallel channel. And if we bring that line back to the daily, see how important it is. So 11.5 is over here. Actually, let's just take this out. 11.5 is where the weekly closed, around this level. And yeah, you know, unsurprisingly, if we were to break that at any point in time here, sorry, if we were to break that after about a week's time over here, then we would also be breaking the diagonal channel here, and that would be quite a good sign for the bulls that we really, you know, have finished consolidating here and getting ready for the next move up. But even then, we want to see proper volume going up. It can't just be this sort of slow, you know, careful move up. There has to be some impulse going through here. So this is really the line. If I'm, you know, I have my my alarms, my target. What do you call it then? The price level alarm set. So if we, I mean, I will already be looking at the charts. If we reach 11,000, I'll be curious to see what's happening there, the price, the volume, the type of price action we're seeing. But the real determination for me will be, do we cross 11.5 with any sort of conviction? And if we do, then of course reevaluate, and then look for a potential risk-reward setup here. For where we would stop out, assuming that we're going for that next big move up, which we analyzed in the last video as being either, what was it, either 20K if we're looking at one-to-one extension of the full move, or I think it was 18, or it's like 16K if we're looking at a one-to-one extension of just this move. But both of those analysis are only relevant once we actually make the buy at these lower levels. And again, I'm going to be making a buy for two reasons. One is that if, you know, we really do correct down to this 618, that it will be a big correction of Bitcoin, and that's a good time to buy Bitcoin is a time when it goes down, right? So it's like if it's gone down by what will amount to about 40% at that point. What am I doing here? We're looking at, okay, that's right, just delete that, sorry. So if it goes down to 7,005, 45%, I mean, you know, if you're not buying Bitcoin at a 45% drop, you don't believe in the long-term value of Bitcoin, you know? And I do, so that certainly is going to be a very good reason to buy. But the other, of course, the trade itself will be another part of the buy, in the sense that I'll have two separate investments. One will be in the long term in the value of Bitcoin as a currency. The other one will be as a simple TA, you know, with a strict stop loss somewhere. I don't know exactly yet where, because it depends on when the price comes down there and what the price action is looking like. If the price comes down there. But that's the general idea. So yeah, we're patiently waiting for the price, and honestly, I'm hoping it comes down here, because this will be the perfect catapult to take it up to new highs. You know, people will start forgetting about Bitcoin, as they always do when it starts correcting, and that's the time to buy. You know, when everyone's going silent about it. So let's see if we can reach this level, and if we can't, then let's see what kind of risk-reward setup we can create should it break this previous high. All right, that's it.